everyone, we are from Group 5 AC1105E and today we will be presenting about financial ratio analysis for comfort gloves Berhad. First, let's talk about the financial statement. Financial statements are the written records that convey the business activities and the financial performance of a company to provide some indication based on company situations. Financial statements are usually audited by government agencies, accountants, and firms. It is to ensure accuracy and for tax, financing, or investing purposes. Financial statements include balance sheet, income statement, and cash flow statement. It can also describe the financial health of the company. It can help the company to make better performance in future because investors and financial analysts analyze the performance of a company based on the financial statement and make predictions about its future direction for the company. The financial statement should meet the terms such as understandable, reliable, relevant, and comparable. Next is ratio analysis. Ratio analysis refers to the analysis of various pieces of financial information in the financial statements of a business. They are mainly used by external analysts to determine various aspects of a business, such as its profitability, liquidity, and solvency. Analysts rely on current and past financial statements to obtain data to evaluate the financial performance of a company. They use the data to determine if a company's financial health is on an upward or downward trend and to draw comparisons to other competing firms. There are four types of financial ratio that we will discuss. The first one is liquidity. It is to measure the ability of a company to meet its short-term financial obligations. The second one is efficiency. It is to measure how effectively a company is managing its assets in generating revenues. The third one is leverage. It is to measure the level of debt or borrowings in a company. The last one is profitability. It is to measure the investor's perception and judgment towards the company's growth potential.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Nazmi bin Akhyar and I will continue our presentation. Okay, approximately, Comfort Glove Berhad is a manufacturing business company and they has operated since 1993. At first, this company is known as Wujudan Teknologi Berhad and then they changed it to Integrated Rubber Corporation Berhad in 2004 before change it again to Comfort Glove Berhad. Another thing about this company is it was equipped with advanced machinery operation that helped them to produce and distribute their product for a worldwide range. Alright, for the liquidity ratio, this company current ratio and asset test ratio is lower than the average in the industry, which is 1.62 and 0.908 for each ratio. This means they have a difficulty to cover their short-term obligation because they are holding too much stock or not paying attention to collect their account receivable or not using long-term source to finance their purchase of asset. They can make improvement like give a discount to their account receivable, adopt an effective inventory control system and negotiate with their supplier to have a lower price. However, for the leverage ratio, this company debt to equity ratio and time interest earned is higher than average industry, which means even they have a higher risk but likely they have a good ability to fulfill their interest obligation and not be exposed to the risk of bankruptcy. At this moment, they can maintain their performance even if they need to make an improvement. It will benefit them for their future business. That's all for me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Yusuf Mal bin Yusri, and without wasting the time, I will start my presentation to explain about the profitability ratios. For your information, there are 5 elements consist in profitability ratios, which is gross profit margin, operating profit margin, net profit margin, return on assets, and return on equity. All of these 5 elements need to be calculated in order to evaluate company's ability to generate income. So after we calculate all of it based on the Comfort Global Heart financial report, we found that this is the ratio of these 5 elements respectively by the Comfort Global Heart. Next, in order to identify whether the ratio of 5 elements of profitability ratios of Comfort Global Heart is better or not, Comfort Global Heart must make a comparison with the industry. So for the company performance, we can see that the Comfort Global Heart has a poor ability to make profit by using its assets in general, since all of these 5 elements in profitability ratios is lower than the industry. Comfort Global Heart is likely to have difficulties to get a better return on the stockholders' investment. So what is possible causes this problem occurs because of high operating expenses and high cost of goods sold due to high labor costs and high production wastage. So for the suggestion for improvement is Comfort Global Heart should need to review the pricing policy, reduce cost of goods sold by changing the supplier that offer more low cost, reduce labor costs and production wastage. In addition, Comfort Global Heart should reduce the overall operating expenses. Next, we move to common size ratio. So, based on common size ratios of financial position for 2019 and 2018, we can see that the company's ratio of property, plant and equipment has shown a small increase by 4.5% from the year 2018, which is 47.4% to 51.9% in 2019. This means that the company has purchased more assets in the year of 2019, so they can increase the output of their production. Next, we can see goodwill on consolidation has increased as much as 0.004% for the assessment of 2019. Goodwill generated on consolidation represent the excess of the cost of acquisition over the group's share in the market value of the identifiable assets and liabilities of a subsidiary. Next, loans and borrowing have increased by 5.7% for the financial year of 2019. The increased amount of loan can be contributed to finance company's business operation. And lastly is deferred tax liabilities. Deferred tax liabilities have increased by 1.5% from the year 2018, which is 2.0% to 3.5% in 2019. A deferred tax liability is a tax that is assessed or is due for the current period but has not yet been paid, meaning that it will eventually come due. The deferral comes from the difference in timing between when the tax is accrued and when the tax is paid. The increase in deferred tax liabilities means that the company is expecting to pay more tax in the future. So that's all from me. Thank you.
Hi and Assalamualaikum. My name is Ahmad Hakim bin Ahmad Sabri, and I will continue the last part for this presentation, which is the conclusion. Okay, let me start. Our group has concluded that the financial analysis of Comfort Global Heart is very not stable based on all the ratios that have been calculated and compared with the average industry ratio. The main objective of the ratio analysis is helping the management to understand the profitability of the company. It will make the operation of the company become more efficient. It also can identify whether risk, whether financial or business risk for the company. The financial statement contribute a lot of help to a company. It will help the company to become better or be improved in the future. It is because every company always compare their previous financial statement with the current statement. The company must aware about the financial statement because it will show about the company condition. If the financial statement is not good, it shows that the company is not in top performance. So the company might face the risk that internal or external risk. The risk will might worse and give bad impact to the company condition and reputation. All the ratio show that the company is not the same level with the average industry ratio. The management has to do a lot of improvement in the future based on this kind of the result. The management has to play their important role and so on the other management. The critical decision will change a lot of performance to the company. The company is nothing without the efficient management. It is normal to have some mistake, but do not make it often because it can affect the company